Good morning, everyone. Well, the dollar has been falling recently, but overnight it showed signs of stabilizing. It was higher against 4 of its G10 counterparts, while falling against another 4, and unchanged against 1, the Canadian dollar. The distribution is worth noting. The commodity currencies were generally lower, while the safe haven currencies, the yen and the Swiss franc, were higher. As you might expect, commodities themselves were also generally lower. Oil, copper, and the precious metals all fell. This despite Wall Street ending little changed and Asian bourses finishing mixed, which indicates to me that the risk-taking sentiment has by no means disappeared. So what's behind the move? New York Fed President Dudley yesterday said in his speech that he's, quote, more hopeful, unquote, about growth nowadays. And the decline in Fed funds future interest rate expectations slowed. Implied yields on the long-term contracts fell by only half a basis point yesterday. This suggests to me that after several days of adjusting to this lower for longer tone set by Fed Chairman-designate Yellen, the market's now starting to reach an equilibrium where this change in view is becoming fully discounted. So, I think the dollar could be in for a recovery over the next few days. Dollar-yen is the pair most likely to benefit from such a shift, in my view, as the technicals there align with the fundamentals. Euro-dollar should pause from a fundamental point of view, but unfortunately the technicals say otherwise. That gives rise to a cloudy outlook for the pair. Elsewhere, the Reserve Bank of Australia released the minutes of its November 5th meeting overnight. Policymakers said there was, quote, mounting evidence, unquote, that interest rate cuts were working, but the board retained the prerogative to loosen further if necessary. Well, that's no change in their stance. The fact that they remain with an easing bias is probably one reason why the Aussie is under pressure today and may continue to be under pressure for the next few days. The only major indicator out today is the ZAW survey for November. Both the current situation and the expectations indices are expected to rise. That could give rise to a modest boost in euro-dollar temporarily. For more information, including technical analysis, please read the full comment on IronFX.com. You can also like us on Facebook, follow us on Twitter, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.